It's about that time of day again here, guys and gals. Back in the action once again. Always great to be here with you guys and gals every evening on this newsletter. It's Tuesday evening. It is September the 10th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, I help traders find high-quality trade setups so you don't have to go through all the stress and hassle of doing it on your own. And my job tonight is extremely important because my job tonight is to help you guys find the best levels of support and resistance, the best entry and exit points to consider for tomorrow, the best setups, and most importantly, the most important traps to help you guys avoid those easy losses in tomorrow. That's Wednesday, right, trading session. I got a lot to cover tonight on this video. We're going to cover some oil, some S&P, some Nasdaq, gold, and euro. I'm going to jump in first here tonight to the black gold, the Texas T, the crude oil futures, because oil looks like it wants to snap back right and rally back up into that range tonight. Let's grab that oil chart here to kick off tonight's video newsletter. And as you can see here on oil, we really had, for the most part, a range-bound day today on oil. Lots of back and forth from OPEC here this morning. So a range-bound day is a balanced market. A balanced market tells me I want to sell high, I want to buy low, and I want to focus on failures. Now you'll notice here the market, of course, runs lower, and now we're headed back up into that trading range. Now the trading range itself, this is going to be the price magnet, so we want to stay away from that area. I want to buy it as it pulls back and then hopefully get a chance to sell it as it comes back in. Buying underneath the range, selling up above the range. And in tonight's video, we'll talk about these specific entry patterns I'm looking for to be a buyer on the way back up, and then of course to be a seller on the way back down, because this could really whip, right? We could definitely have some momentum shifting here for those bulls. We're going to dive into all the details of how I want to get in long in the short term and potentially sell this thing, right, in the medium to long term here tomorrow after the inventory report comes out. We'll talk more about that oil here in just a moment. Over on the S&P is still dealing with that range-bound market from earlier on in the month of September. There is an overall bull bias to it, and so we know that a range-bound market, a sideways market, a balanced market, what does it tell us? It tells me I want to sell high. It tells me to buy low. Here we go, right? We're buying now underneath this range here, but you'll notice one thing, right? Where are we? We are right back inside the middle of that trading range. So at this point, we've already got the rally going back into the range. That's, of course, what oil's trying to do here in the overnight. We're back inside the middle of this range right now. I don't want to be buying. I don't want to do anything inside this range. What I want to do is I want to buy low. I want to sell high. And, of course, we'll talk about some specific opportunities here to buy as the market pulls back. As you can see, I've got quite a few levels of support lining up around that 2970 area. So we'll talk more details as far as what the exact entry pattern will be as we try to go higher. And if we keep going higher here, right, there's that pendulum swing up around that 3,000. Could I buy up top here? I definitely think there'll be an option to buy a pullback if we can get enough momentum. And we'll talk more about that here in tonight on the video. So make sure you stay tuned for the S&P. Nasdaq is in a very similar situation to the S&P. Nasdaq, of course, is overall a range-bound market. Again, ranges tell us to sell high and to buy low. We are now below that range and trying to go back up now into that trading range. Now, having that range overhead, I've got a lot of different options. I'd love to buy a pullback to a level of support. You can see I've marked up here. We'll talk about the specific entry patterns we'll look for in the video tonight. So I'd like to buy a pullback. My only challenge here is going to be if the market keeps rallying with a short covering rally, if it keeps going higher here, because I don't want to trade inside that range, right? I want to stay away from that range. So I have to think fast here. If the market rallies higher, I've got one particular setup I'm watching for before we get up into that range. And then I'll tell you, it really all depends on what happens if we go through the range or if we kind of stall out inside that range as far as how I'm going to try to sell this market back down tomorrow. So we'll talk about buying at support, selling overhead at resistance, and of course we'll talk about all these specific entry patterns we're going to break down on that Nasdaq here. Over on the gold of course is bearish right now, as you can see. 1, 2, and almost 3 legs down. Now, a 3-legged move is a very important clue, and we'll talk more about this right in the video tonight. But we're at a major area of support down here, right? That measured move. We're also underneath what looks to be like a range. This range, of course, with double bottoms, double tops, right? This trading range tells me this is a very dangerous spot to be a seller. And because it's not a great place to be a seller, I'm definitely looking for a possibility here to be a buyer off of that low. I've got one of my favorite counter trend reversal setups we'll talk about tonight on the gold to buy off of that low. I'll also talk about how to sell off the high of that range, right? We know it's a range-bound market right now, so selling high, buying low. And then what if the market keeps going lower? What if it keeps going lower? Is there a point where I could trade a breakout down here? Absolutely. I've got one very specific breakout pattern I'm looking for as we go lower, and we'll put together that plan here tonight on the video. Buying low, selling high, qualifying the breakout. We'll definitely talk more details here about the yellow metal tonight. And then, of course, over on the euro. Euro, you can definitely tell, is getting prepared for that ECB announcement later on this week. They're going to probably go negative interest rates later this week from the ECB. But you can definitely tell that the euro is quite consolidated right now. There's a little bit of a bear bias to it, a little bit of a bull bias. I'm calling this a neutral market right now. I think you'll have no problems buying low and selling high. Look at that tight, narrow range. Now that narrow range, believe it or not, is probably the biggest clue on this chart because it helps me identify exactly where I want to be a buyer, exactly where I want to be a seller. I want to buy low, I want to sell high, and of course, as always, I want to avoid the middle of that trading range. How about breakouts? We'll definitely talk about what a breakout needs to do in order for us to trust it, right? How do we trust a breakout higher? How do we trust a breakout lower? Remember, when it comes to a range-bound market, I don't want to trade breakouts. I want to fade breakouts, buying low, selling high. But we'll talk about what to look for to qualify a successful breakout in tomorrow, Wednesday's trading session. We got a lot to cover here tonight, as you can see. We got the euro, got some gold, Nasdaq, obviously, S&P, and oil all locked and loaded here for tonight's video. Before we jump in, though, before we jump into the video tonight, I just want to remind you guys that just before I publish this video on our YouTube channel, I send out an email to everybody on our mailing list, and I want to make sure you get that email. That way you know exactly when our nightly newsletter goes live every evening. And it's actually very, very simple. Go right to the blog here at Sideways Markets. All I need is your name, your email address, and then hit that subscribe now button. And don't forget, when you subscribe to join the mailing list, your job is not over yet. I'm going to send you a welcome email, so check your inbox, because in that welcome email, there'll be a verification link that you need to verify your inbox, as well as a bunch of great free resources so you can get the most out of working together with me every evening on this video. So don't delay, pause the video, head over to the blog at sidewaysmarkets.com. If you're here on YouTube, I'll put all the links in the description of the YouTube video. Grab that mailing list, and don't forget, check your email, because I'm going to send you an email to welcome you to the list. And of course, I need to confirm that you got that email so I can keep sending you emails every evening when this newsletter goes live. And then last but not least, before we jump into the chart tonight, I got a question for you. If you could go back and turn back time, if you could do this over again, what would you do differently in your redo, right? Down in the comment section below. You know, I'm always trying to learn more about what you guys are going through and how I can make this video newsletter even more powerful every evening. I always want your feedback. I love to hear about what you guys love and what you hate about this video, what you would add or what you would remove about this video. So please, please, please give me some feedback in the comment section below, because I read all those comments. I use them to help me improve this video, and it would mean the world to me if you spend a couple minutes of your time to give me some feedback in the comment section below. What do you love? What do you hate? What would you change? What would you leave? And most importantly, the big question for today is if you could turn back time and go back to the beginning of your trading career, knowing what you know now, what would you do differently? what would you really have focused on more and what would you avoid? What would you do differently if you get a chance to redo your trading career? I know what I would do differently. I've got a long list of things that I would do differently, but I'd love to know what's on your mind here. Post those comments in the comments section below. And guys, while you're down there in the comments section, hit that thumbs up button for me, because believe it or not, every time you hit that thumbs up button, YouTube helps me expose this video to other traders who definitely want to learn this as well. So after you're done dropping that comment in the comment section below, hit that thumbs up button. That will help me to expose this video. And again, always means the world to me that you guys spend so much time with me every evening on this nightly newsletter. And don't forget, if you're not into the comment section below, please feel free to pick up the phone and call that toll-free phone number. Maybe you don't want to post the question in an open comment section. Maybe you want to call me in the office. You know, I'm always here, right? I'm here in Los Angeles, nice and early in the day when I publish this video, so you can always pick up the phone, call that toll-free phone number. I look forward to answering the call, answering all your questions, helping you get the real truth information that you need, so you're not wasting time going all over YouTube or Google trying to find solutions, right? Best brokers, best charting software, right? More information on our free pass to our trade room, more information on our free trading classes. Call that toll-free phone number in the upper right-hand corner, and I'll be standing by to help you guys out every step of the way. In the meantime, though, let's get to work here this afternoon here. Tomorrow, of course, let's check the calendar for tomorrow. Tomorrow's Wednesday, September the 11th. Let's see what's on the schedule for tomorrow. Now, as I mentioned in last night's newsletter, the next couple days are going to be relatively busy. Tomorrow, you can see here we got the PPI number, we got the petroleum status report at 10:30. Then, of course, we got CPI and retail sales to round off the week here this week. So, of course, Wednesday tomorrow, hump day in the trade room tomorrow morning. And we, of course, have some big news tomorrow morning right at the beginning of the day. Tomorrow's the PPI number. That is the Producer Price Index. Any Producer Price Index, CPI, Consumer Price Index, these are all about inflation. These are inflation numbers tomorrow. And anytime we think about inflation, I think U.S. dollar. And when I think U.S. dollar, I think euro. I think gold, right? I think anything that's tied to that dollar. So tomorrow morning, 8:30 Eastern Time, definitely keep your eyes on the euro and the gold. We, of course, open up our trade room every morning at 8 o'clock Eastern Time, and so we'll definitely be watching that with a front row seat tomorrow morning. Later on in the morning, at the petroleum status report, that weekly EIA number at 10:30 tomorrow morning. Don't forget, if you're an oil trader, my cutoff on Wednesdays, I typically sit on hands from about 10 o'clock to about 10:40, 10:45, right, on a Wednesday morning. Now, keep in mind, this is just for oil traders, right? I'm not talking about all the markets. This is just for those oil traders out there, all those crazies like me, right, that like trading the oil markets, 10 o'clock till 10:40. The reality is tomorrow morning, after 10 o'clock, things will get relatively slow. And then, of course, news comes out at 10:30. It'll be pretty violent until about 10:35, 10:40. Then once the dust settles, then we'll jump back into the oil market tomorrow morning in our trade room and wrap it up ahead of lunch. So two major news events tomorrow morning. One is the PPI number at 8:30. Again, watch your gold, watch your euro, right? Really all the currencies tomorrow will definitely be affected by that. But euro, right, pound, the dollar yen, right? Things like that that are highly volatile to the U.S. dollar will definitely be on our radar tomorrow morning. And then again, that petroleum status report at 10:30. Just watch yourself around 10 o'clock tomorrow if you're an oil trader. And then don't forget on Thursday, right? Thursday, we got that ECB announcement early on Thursday. So be aware tomorrow afternoon, gold and euro will probably be a little bit dicey, so get to those markets, euro and gold early tomorrow. Got the ECB announcement on Thursday morning, and so that usually means early in, early out that afternoon before. Not to worry, though. We'll come back and we'll talk about the plan for Thursday in tomorrow night's newsletter. In the meantime, though, let's get some charts opened up here this afternoon, and let's get to work here. Starting off here, we got some crude, some S&P, Nasdaq, gold, and, of course, we can't forget about that mighty euro. We'll wrap up tonight on that euro. Over on the crude right now, crude oil is a range-bound market. right? Overall, it is a range, but obviously you can also see here too, I've drawn some trend lines down, some trend lines up, and you could easily call this an expanding triangle, right? So we are looking for rotation back and forth, and as I mentioned in the introduction, whenever I have a range like this, my goal is to buy low, my goal is to sell high, and of course, stay out of the middle. And I'm going to warn you, staying out of the middle is a lot easier said than done. It's not the easiest thing in the world to do, especially when you're trying to find more trades here. So the most important thing right now is we want to be a buyer underneath these lows. We want to stay out of that middle, and we want to sell off of that high. At this point, you can clearly see here the bears went running lower. That strong move down that we saw earlier on, just after lunchtime, right? They did get their retest. This is a very classic scenario. Anytime we see a strong move in one direction, you're going to probably see another leg. You'll notice I marked them up 1 and 2. We call this the 2-try rule in our trade room. Now we've got the sellers on the ropes here now, and you can definitely tell by the strong green candlesticks coming up. Those sellers now have given way to buyers here with a short covering rally. Now there's a couple things I'm watching for right now. One of them would be a pullback, and I'd like to use this trend line coming down. Okay, that's one easy way, right? That'd be what we call a two-legged pullback setup, a 2LP. In other words, we pull back to that trend line. What I'd really like to see, though, is I'd like to see a failure below that moving average. What I really like to see here, get a nice failure pattern right off of that moving average and back up into that range. So buying a pullback is definitely something I'm looking for on that. I also think as we go higher here back into that range, we may have to sit on hands for a little bit and look for a failure pattern below the low of that trading range tomorrow morning, right? Buying with a failure pattern below that range. That could easily be something we look for tomorrow. And then also too, as we go higher here, I'm wondering, do we sit, right? Do we sit inside the range, then go higher? Because if we do, that would absorb a lot of that momentum, and we could definitely be a seller with a failure pattern going back down from there. But if the market continues to run, right, if it really continues to run higher here right now, I'll definitely tell you that pendulum swing, the amount of the move, right, the amount of the move below, if we were to kind of rework that pendulum swing, you don't really need to in this case because we have that expanding triangle, but if you were to rework that pendulum swing, you can easily see that there's a good potential up there, right? Adjust that pendulum. We may get a nice run up around that 59 even area here, especially with some OPEC stuff coming out tomorrow morning, right? The inventory report tomorrow morning at 10:30 Eastern time. So it really all depends on as we go higher. As we go higher here, do we really, does it really cook? Because if it really cooks, we should be able to get a pullback, right, and finish off that pendulum swing. But if it just kind of sits here inside that range for a while, then it goes up. Now that momentum's not going to be as strong at that point. What I'll do is look for that failure pattern, right, to sell back down again. So a lot of this has to do with how the market either pulls back or how it sits inside of that range. The basic foundation of this is that we know the range is the magnet, right? What goes down will likely come right back up. I just don't want to trade inside that range. So one scenario I'm watching for right now is going to use this trend line for what I call a two-legged pullback. And this is maybe not a two-legged pullback, 1, 2, 3-legged pullback, but the idea is pretty simple. Draw that trend line over and then use that trend line now in combination with that moving average, right, for, again, what I call a 2LP or a two-legged pullback pattern coming off of that trend line. Now, what may be a little bit more reliable setup, because we may be above or below the moving average, is if we do get that pullback now, the moving average will be over above, right? These are my favorite setups. I'll look for what I call a failure pattern. I'll look for sellers to try to sell off the moving average right here. And once I get those sellers trying to sell off the moving average, now I know where their stops are, and I can buy right into those stop losses. Now, this pattern almost always pulls back. This pattern almost always pulls back here on a pullback setup. So you can kind of see there are 3 potential setups here right now. A two-legged pullback off the trend line. A little bit more reliable setup will be the failure pattern off the moving average. And then, of course, finally is that pullback. Now, the pullback pattern, remember, you don't want to take that pullback inside the range. So if we end up going something like this and it really runs up like this, right, you wouldn't want to take the pullback inside that range. That's not going to be a very reliable spot for that pullback. But if I can get that pullback coming in nice and fast, right, failure into pullback, absolutely I can buy that pullback. All right, again, the goal is to go back up into the range. I don't want to be trading inside the range. I want to be buying it as it goes back into that range. Okay, so 3 different patterns there: two-legged pullback, seller failure pattern, and bull pullback, again, as long as we're outside of that range. Now, speaking of being outside, what if we do end up back inside the range here? What's the plan then? Well, nothing really changes. We definitely have a bull bias at that point, which means I want to be a buyer underneath the range. Now, my favorite way to be a buyer underneath the range is to use a failure setup. I'll wait for the market to try to go lower. I'll wait for that moving average to come over, let those sellers sort of sell off the moving average. Then again, I know where their stops are. I know where their pain point is. And now I can buy as the market runs back up into that trading range. These are very, very common in range-bound markets, right? A failure pattern, what I call a 2-try failure. 1 try, 2 try, 2 try failure pattern. Then we're buying into that failure. But let's talk about what if it keeps going higher here, though, right? What if it really runs? If it doesn't take a pit stop inside that range and it really runs as it goes higher here, honestly, what I'm hoping for is what I call a 1, 2, 3 reversal, which would be a 1, 2, 3 run up. If we can get a real strong run higher here, what I can do is mark up that high, mark up the low of a new hidden channel, and I can buy that pullback to that hidden channel. Now, please remember, this requires a lot of momentum. Okay, the only way I'm going to do this is if I see this thing really jump as we go, right? Got to be a real strong move up. Then we'll mark up those 2 highs, bring it down to that low, and focus on buying off that low. We'll call this a 1, 2, 3 reversal, as in the term 1, 2, 3, right? That move higher, and then of course a pullback to the low of a hidden channel, right? 1, 2, 3 reversal into hidden channel pullback. Where's my target? My target at that point, again, is that pendulum swing up around that big round number at 59 even. But what if we don't make that, right? What if we come back and we sit inside the range? Then what do we do? Well, at that point now it's pretty much your standard range-bound market, right? There will be a little bit of a bull bias to it. So as we go higher here now, I'm going to look for that nested failure pattern, right? It's a slight variation of the failure pattern. It's a 1 try, it's a 2 try, and a failure back down. This again is I'm trying to sell, right, off of this high. Good example back here, right? We go up, very strong move higher. You don't want to be too aggressive on it. So you wait for the 1, you wait for the 2, and you let it rip once you get that 2 try failure. That's the same exact pattern as I'm talking about here for tomorrow. So again, a lot of this has to do with how does the market look as it goes higher here, right? 1, do we pull back, right? Get that 2-legged pullback into that failure, into that pullback setup, right? Beautiful potential combination set up there. 2-legged pullback into that failure, into that pullback pattern. Or we go running up into that trading range, right? Range-bound market, bull bias, 1 try for the bears, 2 try for the bears, 2 try failure pattern, back up into the range. Or do we get back into that range and sit for a while, then jump up, try to break out? Again, look for that nested failure, right? 1 try for the bulls, 2 try for the bulls, drop it back in. Again, where's my target? Target is back down into that trading range again. Or we get that 1, 2, 3, big strong run higher, mark up the high, mark up the low. We know where our target is. Target's up at that pendulum swing, right? Think of a pendulum swing like a measured move for a range-bound day up around that $59 a barrel. So now we've got a pretty good plan here for what's going on tomorrow morning. The only real kind of variable right now is we got that news report tomorrow at 10:30. So make sure you get to it early tomorrow. And again, as always, we'll be in our trade room bright and early tomorrow morning, 8 o'clock Eastern time, and we'll get this all updated and we'll do it together. Now, I got to keep moving. I'm going to go to the S&P coming up next here. Before we jump into the S&P chart, though, I want to make sure I give you the opportunity to get a deeper dive into all of these entry patterns, right? Two-legged pullbacks, failures, two-try failures, nested failures, 1, 2, 3 breakouts. If you're here for the first time right now, I'm sure a lot of this terminology is way over your head. And that's fine, because I'm going to give you access to our free trading course here at School of Trade. Follow that link in the upper right-hand corner. I'll also put a big red button for it right below the video tonight on our trading blog. Follow that link in the upper right-hand corner, or grab that big red button right below us here on the blog at Sideways Markets, and get registered for that free trading course, because as part of that free course, you'll learn my 4 favorite entry setups, my 3-step trading strategy, and you'll see hundreds of examples of how we apply, right, these setups to our favorite futures markets. If you're serious about your trading career, definitely take me up on that offer for that one time, right, that free trading course, that we can learn the entire strategy that we trade every morning in our trade room. So grab that free class. Don't forget, when you register for the free course, I'm going to email you all the details for it. So make sure you check your email, and sometimes those emails get stuck in your spam filter. So heads up on that. Now over on to the S&P 500. S&P is somewhat similar here to the oil, right? Strong bull move up into a trading range. So that is kind of the foundation of everything we're basing our strategy on for tomorrow, right? The S&P is bullish into a trading range. A range-bound market. What does a range-bound market tell me? It tells me sell high. It tells me buy low, doesn't it, right? So now here we are buying off of that low, but all of a sudden, like I mentioned in the introduction, we're right back up into that trading range. Just like oil, I've marked up the amount of the move below to the amount of the move above, and we can definitely see an easy target up there at 3,000 if big if there, if this market can successfully push through some of these highs. So zooming in on the chart here right now, just going to zoom in here a little bit closer here, that we can see more details here of what we're dealing with right now. Couple more things here. Again, we know the basics here. Sorry about that. We know the basics here is it's a range. And I'm right inside that no trade zone right now. We know we're bullish. Sorry about that. Keep hitting the wrong button there. Right? We know we're bullish on the move back higher, so I want to be a buyer. I just don't really want to be a buyer inside that no trade zone. So I'm trying to stay out of the range. I want to buy low, down in the buy zone. I want to sell high, right up in that sell zone. Again, knowing that we are bullish right now, a lot of this, right, a lot of this has to do, a lot of this is very similar to what we were talking about earlier on the oil market. I'd like to get the market to pull back here for us. You'll notice I get a trend line. Boy, oh boy, sorry about that. This mouse is a mind of its own here tonight. Right, I'd like to buy a pullback here if I can get my act together here with you guys. Right, I'd like to buy a pullback there. You'll notice here I've got that trend line coming down, trend line coming up. So that's a really great spot right there. You could also say too, it's kind of like a, right, it's kind of like a inversion line or reversal line, whatever you want to call it there, right? Pretty popular spot there around 2970 area. So that's definitely something on my radar here for a pullback. I want to stay out of this, right, out of this middle, obviously. And really, just like oil, right, if we sit inside the range and then go up, I can sell it, right? But if we run through that range, though, I'm going to definitely consider being a buyer, at least in the short term. Try to get that run up to the top of that range, and possibly that big round number with that pendulum swing. After all, we just heard some headlines between the U.S. and China, right? Sounds like things are getting a little bit clearer on that trade deal, and that may bleed into this market, right? Bullishly, that is, right? Tomorrow morning at the opening bell. So we know we're bullish here right now. I want to buy a pullback, right? That's the first clue. The first thing is, let's get that pullback coming down. Now that pullback, just like on oil, I've got my levels of support I'm waiting for. I'm waiting for a pullback. Now anticipate this, right? If we get that pullback on this, right? If we get that pullback, right, market pulls back, we're going to be just below that moving average at that point. And at that point, what I'll do is I'll look for those sellers to try to sell off the moving average. And once they do, I know exactly where their stops are, and I can buy right into those stop losses. Again, a failure pattern, a seller failure. You can see an example back here, right? We go lower, below the moving average. The sellers try to sell off the moving average. They fail, right? And of course, we run back higher. Now, that's the same basic pattern I'm looking for here tomorrow around that sweet spot, right? Up around that sweet spot. Again, we have that trend line coming up, trend line coming down. That will be a dream come true if we can get that set up. Now, at the same time, if we go sideways here and kind of get sucked into this range a little bit, if we do go sideways inside this range, much like oil, it is a bull market into a trading range. I want to buy underneath that range. What's the best pattern? A two-try failure, right? Let them try once, bears try once, bears try twice. Remember, I never try to call a bottom on that, right? I'm not a big fan of trying to call a bottom, because what will happen is if you buy that first move outside, you'll like to get stopped out just in time for this market now to run higher here, right? So we're trying to avoid getting stopped out of those breakouts. We know that most breakouts will fail. I want to buy low, so I'll wait for that first try to run lower, get that moving average over. Let those sellers try to sell off the moving average. That way you're protected here. You're not just trying to pick that bottom, because the problem with picking bottoms is obviously your stop can get hit pretty easily there, right, and run back higher without you. So don't get in too early. Let those sellers commit. Once they commit to it, now you've got a dead bullseye, right? Now your bullseye is pretty easy. Now you know where the pain begins, and we can look for that failure pattern. And again, if we have enough space for it, the pullback pattern, the key is you just don't want that pullback pattern to happen inside of that range. Failure pattern into pullback pattern, right? And then, of course, back up into that trading range. So if we do end up sitting sideways inside the range, sit on hands as well. If we sit on hands here for a bit here, then, of course, the market runs higher. Now what's the plan? Well, now, of course, right, overall bull market, there's a slightly different variation of this I'm looking for now to sell off the highs. It's a nested failure. One try, two try, and then we'll try to sell off of that high. This one's a little bit different because you got to remember the overall momentum is bullish. So if I want to be a seller when the market is bullish, I have to give, first of all, I got to give those bulls the benefit of the doubt. Second of all, I've got to wait for them to try a couple times, let them commit to their positions, because you just won't be able to have a very easy job trying to call that top. It's very difficult to call tops and bottoms with small stop losses. And I know most of us are using small stops. I take a lot of pride in the fact that we use very small stops, relatively speaking, in our trade room every day. And it takes discipline. It takes a very precise strategy to use those small stops. The problem is, if you try to just simply sell right into that market, you try to sell into that market right now, the odds are pretty good that because you hit the sell button, they're going to come up, they're going to stop you out, and then go right back down to that range again. So better to save your bullets, let the buyers try once, let them try twice, and then sell from there. It's a much more reliable setup, and that'll help you avoid getting stopped out of those fade breakouts, right? We want to buy a little, we want to sell high. It's just tough to pick the bottoms or pick the tops, especially if you're using a relatively small stop loss like we do in our trade room. So that's the plan there on the sell off that high. What if the market really runs though? If the market really runs here, look for a 1, 2, 3 breakout. At that point, we're going to mark up that high. We'll mark up that high, right? And I will look at a buying opportunity in the short term, obviously, right, for that 1, 2, 3 breakout. Again, it's 1, 2, 3 because it's 1, 2, 3, right? Now, remember, at this point now, these guys are ignoring the range, right? At this point, what range? Okay, there's no sign of any range, right? We're not going up and getting chopped up in here. Okay, that tells me the range is the most important thing. If we run right through it, 1, 2, go, right? That tells me now they're hunting for those highs. Mark up the high, mark up that low. Now we know where our channel is, right? And again, you'll notice you need these two highs to find that channel low, and then that's going to tell you where the key level of support is to be a buyer as we're going higher. Now, really the targets at this point, targets overhead are pretty easy. I like this trend line coming in, right? This kind of trend line I got drawn up here, right? So we got that big old trend line coming in. So that's definitely going to be something on our radar. right? That trend line is certainly going to be a big target for me tomorrow. And then obviously that pendulum swing, as I mentioned. Like I said earlier, I wouldn't hold your breath on that pendulum swing tomorrow, but I definitely think if we can get a nice strong run here, we may be able to get, right, that retest at least up in that 29.95 area before we start running into profit taking here overhead. So again, looking for that failure pattern, right? That failure into pullback combination coming off of that low. If we do sit sideways inside the range, it's the 1, it's the 2 try. Failure again, don't try to pick those tops and bottoms. Wait for the failure pattern instead. Or if we do go sideways here, it's a nested failure, right? Jump up. Not a big breakout, right? But a jump up here after the range, 1 try, 2 try, and back down into that range. Or if it runs 1, 2, 3, mark up that high, mark up that low, and of course we're buying off of that low. Target is at the trend line. Target is up around that 3,000 as we go. Now, last thing we haven't talked about yet is what if the market turns around and breaks down? Right? How would we break down? What does a breakout look like to the downside? Strong move down starts it off. Pull back to the moving average required. Strong move off the moving average. If we can get a 1, 2, 3 reversal, 1 strong move down, 2 moving average comes over, 3 strong move off, right? Strong move off that moving average. I'm going to mark up that low, going to mark up that low, find that channel. There's my sweet spot now, and we're looking to sell right off the high of that channel. Again, make no mistake, this is not a very small move lower. It's a very strong move down, pull back to the moving average, strong move off the moving average. That's going to give us the definition of a reversal. The bears will take control. And where's my target from there? My target from there will be all the way back down to that low from earlier on, right? From earlier on this month, right? Back down to these lows here. Get some major support levels here, back down to 29.5, 29.35. And we'll know more about those final targets tomorrow morning in our trade room once we have a little more knowledge of what the reversal looks like. So got a pretty good plan there for the S&P. Again, I've talked about a lot of patterns here tonight on this video, and I want to remind you, if you want a deeper dive into all of these patterns, learn my 4 favorite entry patterns, my 3-step strategy, grab that free trading class linked up in the upper right-hand corner, or hit that big red button right below the video tonight on the trading blog at Sideways Markets. Looking good here. S&P is looking good. How about that Nasdaq? So Nasdaq looks great. Nasdaq has a nice short covering rally going on right now, which means unlike the S&P, the Nasdaq definitely has more room to go, right? Nasdaq has more room to go. Nasdaq, of course, very similar to the S&P in many situations here. It is a bull market into a trading range. I do want to be a buyer on the way back up into that range. I've marked up the amount of the move below to the amount of the move above. That gives us a little bit of an incentive. I wouldn't go holding your breath on that for tomorrow. 79.76. We did just hear from Apple reporting, right, the newest iPhone release. I just don't think you're going to get that much excitement out of this new iPhone release to kind of cause this thing to run that far tomorrow. But I've been wrong before, and I might be wrong again, so who knows, right? We'll always be open-minded to it. So we know we got that range. We know we had this strong move down. We talked about this last night again. We had that strong move to finish up last night's newsletter. So we were expecting to see another leg going in that same direction. They ended up taking it really far, right? So 1, 2, and then back up. That nested now. In fact, you could say this is actually 3 attempts, right? Strong move down, bears try once, bears try twice. A lot of buyers are jumping in after that second try failure. You can see how quickly, right, it ran higher because of it. The bears didn't give up, though. They tried one more time, and you can definitely see that crown reversal if you follow the newsletter, right? The little trap low there. Buyers got one more gift off that trap low, right, coming off that trend line. So those are some great setups there this afternoon on the NASDAQ. Again, a nested 1 and 2, right? First buy signal coming in off of that number 2 pattern. They couldn't get the job done, though. They trapped it down, right? And buyers got one more here now and ran it back higher here. At this point now, the gig is up. The bears have failed. The buyers are taking control. We know they're trying to go back up into that trading range. And really at this point, it all comes down to, just like on the S&P, What does the pullback look like? Do we get a pullback at all? I've got some trend lines coming in below me. The market's bullish, so I definitely want to be a buyer at support. I'm marking up the trend line. I'm finding a hidden channel. So really this whole area down here between these two trend lines are really where I'm focused on finding my next setup right now. And again, much like the others, if we do get that pullback, that will likely put us below the moving average. As we go below the moving average, look for sellers to try and fail. That failure pattern leads to a pullback pattern, right? And running back up from there. Again, failure pattern, pullback pattern, and up we go from there. So if we do get that pullback, you know where I want to buy off of support, rising support trend line, hidden channel support. Again, it's the Nasdaq here, right? So it will get a little bit volatile. Look for that strong move down. Look for that moving average coming over. Sellers will try to sell into that pullback. It's not a bear market at that point. The bears have tried too many times, and now this rally higher tells me we want to be a buyer here until we get back into that range. I'm looking for that failure pattern, into that pullback pattern, and then hopefully a nice rally back up into that trading range tomorrow morning. On the flip side, if the market does keep going here, there's a couple things actually there's one basic pattern I'm looking for, and that is that two-try breakout pattern. If we keep running higher here right now, I'm looking for what I call a two-try breakout with a trap low. I don't want to trade inside the range. So as we run higher here, I'm looking for a one try for the bears. I'm looking for a two try for the bears. And as we get that second try, to avoid buying into that range, I'm looking for a trap. So in this case, what you want to see is you want to see the price keep going higher a little bit. Get the buyers, right? Get the buyers taking profit. Then get the sellers trying to sell it. Okay, first pullback will be buyers taking profit. Second pullback will be the actual sellers now selling it, right? That's the key there. One try, two try, wait for those bears to commit, trap low. And that trap is essential because you don't want to be trading inside the range, right? You don't want to be waiting to get in too close to that range. You want to find that trap low to do it instead. Okay, so that's the plan there as the market goes higher. Now, if we do get a 1, 2, 3 breakout or 1, 2, 3 pullback here now, again, I'm a little bit skeptical of buying too aggressively here just because we're not going to be buying at support, right? So I do want to try to get down to that low, get down to that trend line, and then buy it up from there. However, if we do get a 1, 2, 3 here, if we can do it quickly, it's got to be real fast before we get back into that range, right? That's the trick. You got to get into it before you get back up into that trading range. Key here is we got one leg. Look for two. Look for three. Mark up those highs down to that low. That will tell you now where your sweet spot is and where you want to be buying. Again, keep in mind, if that keeps going up like this, it's not going to work, right? You're not going to want to take that trade. It may work, but the odds are not going to be as good. Okay, makes sense? So that trade right inside the range, just not a very reliable trade. So get that 1, 2, 3 reversal. 1, 2, 3. Get it quick, right? Get it quick on that pullback before we run into that trading range. All right, guys, pretty simple plan there as the market goes higher. Now, as we run higher here, if we do end up back inside that range here, okay, keep in mind, again, that's your range. So once we end up back in that range, buy low, sell high, buy low, right? One try, two try failure, buying back up into that range. Does that make sense, right? One try, two try, buying back up into that trading range. What else? Same thing as to the highs here, but instead of a regular failure, it's a nested failure. We go up, one try, two try, and the only reason why I'm more conservative for the sell side is because the overall momentum will be bullish. You know, just because I'm at the top of a range doesn't mean I can easily sell it. Okay, a lot of times the market will go up in these highs and it will make it very difficult to sell it off the high because of that momentum. So just because we're at the highs, I do want to sell, but I have to make sure I respect the momentum of those buyers, right? Let them try once, let them try twice. Once we see those bulls trying twice and failing, now I can sell it back down into that trading range. And then from there, if we do end up back inside that range, right, I will look for that 1, 2, 3 breakout. It's possible. It's probably not going to happen, but it's possible. Mark up that high, mark up that low. If we get that 1, 2, 3 breakout, we're looking for that, right, that pullback to the low of that hidden channel. And of course, that pullback puts me now, right, up into that pendulum swing, right, for that target. So doesn't look likely tomorrow, but that is always the possibility. We always want to keep our eyes open on that. So again, I'm looking for that pullback, right, that failure into pullback combination off of that low. Or if we do go higher here, it's that 1, that 2, that trap, that 2 try breakout. Or it's the 1, 2, 3. Remember, you got to get it fast, right? Got to get it fast. Got to get it early. Don't take it inside the range there. We run back up into that range, chopping around here, right? We're back into that balanced area. It's 1 try. It's 2 try. It's back in, right? It's 1 try. Well, sorry, it's breakout. It's 1 try. It's 2 try. And back in. Slight variation to that failure pattern to sell down off that high. Don't forget, guys, don't forget, you can learn all the details of all of these entry setups along with seeing hundreds of examples of how we apply these setups to our favorite markets. Grab that free course linked up in the upper right-hand corner or hit that big red button there below the video tonight on our trading blog to learn more. Let's keep going here. Over from the Nasdaq now over to the gold. Now gold, of course, is the opposite of the E-minis. There's an overall bearishness here to the gold right now. You can easily see lower lows, lower highs, but this double bottom gives it away. That double bottom that we saw earlier. And I realize it's not an exact double bottom. Double bottoms and double tops don't need to be exact to be effective. Nothing needs to be exact for that matter when it comes to day trading. I want to be close, but not, it's not the end of the world if it's not a straight double bottom there. But that is definitely a bear market, obviously. They tried to keep it going and they failed, right? So clearly there is rejection happening. Clearly there is a major area of support there, right? I've got it listed here as a measured move. So clearly there is a support level here, right, that sellers just couldn't crack through, right? They couldn't crack it there a couple times. It does look like they're trying to make the job work right now, but for all I know, right, I mean, they're literally sitting right on that low. So for all I know, this could be all we get here from these bears. We know we're bearish, but we don't have enough evidence just yet to suggest that this thing's going to keep going lower, right? This is why I always recommend that when you have a strong move down, right, have a strong move down and you get that pullback, that low, that's the objective, right? They've got to prove it to you. If they can prove it going through, now, well, put it this way, if they can push through this low now, then I extend this out, mark that channel, mark that high, and now I know where to sell. Okay, but again, they've got to give me some proof going through that low. If I can't get some proof going through that low, the last thing I want to be doing here, right, is trying to sell that low. What else might happen here is you may see it bounce, right? And it may bounce right off that low, and at that point, that becomes a range. And when it's a range, what do we do with the range? We buy low, we sell high, right? We sell high with a failure. We buy low with a failure, right? We fade those breakouts. So we run lower, we bounce, right, and go back higher. That creates the range now. The buyers, of course, come up. They try to buy it. They fail into a pullback and running back down. You've seen this pattern many times before, right? That buyer failure into seller pullback. We've talked about it a lot tonight on the bull side, right? It's that buyer failure into seller pullback. It's right there. Buyer failure into seller pullback. Now, obviously, right, every one of them looks a little bit different, right? They'll never be two exactly the same patterns, but that's the trick, right? You know there's your range. Once you see that double bottom, you know the range there, we go up. The buyers try to buy it. They fail. Market slams down to the range, pull back, and go. Failure into pullback setup. And again, guys, I'm just simply drawing on the screen right now for these, but I would encourage you, if you want to see a lot more examples of how we apply these patterns to our favorite markets, make sure you check out that free trading course linked up in the upper right hand corner there. Now, as we go lower here, I want to be a buyer off this low, but the problem is it's not a bull market, is it? It's a bear market right now. right? It is. It's a bear market. I've got this trading range. I use the size of that range now to tell me where the sell zones are and to tell me now where those buy zones are. I want to be a buyer off this area just like I want to be a seller off the high. The problem is it's a bear market. Now, what's the best way to buy in a bear in a bear bias range? It's not a trend, it's a range right now. And because we're sitting right at that low, we don't have enough proof to call this a continuation like we saw earlier, right? Strong move down, continuation. We don't have that continuation yet. All we have right now is a stinking double bottom, right? Double bottom is not going to help us for too much proof. Now, how do we buy a bear market or a range-bound market with bear momentum? Very patiently, right? Patiently. Now, the key here is going to be staying outside of that range. So the trick here will be I want to use that nested failure, right? That one try for the bears, those two try for the bears. What I really want here is a trap. And the reason why is because even after I get two tries here, what's probably going to happen is we're probably going to be forced to trade right inside the range here. I really don't want to trade inside the range. So if this comes up and we go 1, 2, yeah, that's not going to be very effective. That's going to be a nightmare. It might work, right? It might work, but it also might not. And it's not going to be the most reliable area to be trading. What I'd rather do here is I'd rather wait for these bears, moving average comes over. I'd rather wait for them now to try once, try twice, and again, I like to get a little trap low there because trap patterns are my favorite way to use the smallest amount of stop possible and of course to buy as low as possible. Now, trap patterns are not going to happen everywhere, right? But in certain times they do, and they're very, very attractive whenever you're concerned about buying really low. And this example is a great example, right? Because we don't want to buy inside that range. We want to buy as low as we can. Trap pattern will be the perfect fit for this. So one try for the bears, two try for the bears. The reason why we want to try twice is because the overall trend is bearish. Okay, and then of course, look for that trap low so we avoid trading inside of that range. Now, with that said, if we run back up in again, stay away from that middle. Right? Stay away from that middle. Couple things I want you to think about here to sell off the high. I do want to sell off that high, right? I do want to sell it off that high. Now, as we go higher here, do we run, right? Do we run straight higher? If we do, that momentum will have to be taken seriously. And because of that, I'll use a nested failure, a 1, a 2, and sell back down. However, if we go into the range, we kind of flounder around a little bit here, that momentum will now be absorbed like a dry sponge, right? Now we can go up one try, let those bulls try to buy the pullback, right? Failure and back down. Just like that pattern that we saw back here. Right? Let them try to go it up, buy the pullback, and sell back down from there. Does that make sense? Right? It's very similar to what we were talking about on the Emini S&P and the Nasdaq before, right? If it just runs higher here, the last thing I want to do is sort of step in front of that freight train. And if I do try to sell a failure, what's going to happen a lot of times is there'll be buyers waiting right below it to buy that next pullback. Right? So don't be surprised if this thing runs higher. If the buyers try once, the buyers try twice, right? Buyers try once, buyers try twice. Don't be surprised if those buyers, right, if they pick that pocket and run it higher. That's why as it runs higher here, I've got to let them try once, try twice, and then if they fail, now I know they're committed. Okay, momentum. Momentum is the big problem there as it goes higher. Okay, the other detail here is if we do get, if we go sideways, that will absorb the market's momentum now. And so now as we go higher, I'll just wait for that moving average pullback to fail, wait for that pullback at the top of that range. I want to sell high, and I want to do that by using a failure for the buyers. Let the buyers try to buy that breakout, right? Let some other poor sucker take that breakout. I'm going to sit here and wait for that breakout to fail so I can sell it back down into that trading range. Now, how about a breakout? What would an actual breakout look like? Well, first of all, if we go higher here, it's pretty simple. It's a 1, 2, 3 breakout. I want to see us go up to the highs, pull back, hold the pullback to the moving average, and then strong move off the moving average. Okay, it'll look like this. Maybe not that dramatic, but it'll be a strong move, pull back, and run off the moving average. Again, maybe not that dramatic, right? But that's what we're looking for. We're looking for that strong move up, that pull back to the moving average. And again, the key here is that strong move off the moving average. Once you have that 1, 2, 3, and you got that pop off the moving average, now mark up that high, mark up that trend line, find your channel, and now you know where that sweet spot is. And now I'm looking to buy that pullback off the low of what will be called a hidden channel. Right? That is a 1, 2, 3 breakout and a 1, 2, 3 reversal, by the way, right, into that hidden channel pullback. Now, keep in mind, too, guys, that hidden channel pullback is a general term. A lot of times what will happen is on that pullback, the market will actually pull back below the moving average and will actually get a failure pattern into a pullback pattern coming in, right? So just be aware, when I say pull back to the low of that hidden channel, be aware a lot of times we'll end up underneath the moving average, and if you were to kind of zoom in on that area, you would see a seller failure pattern off the moving average into a bullish pullback pattern running higher here. And again, running higher, my target will be up at those highs at that 23.9, right? That 23.9 there. So that's the idea, right? That is the idea behind that breakout going higher. Now, the breakout going lower is going to be a lot more challenging because we got this big level here at 1488.9. That is a very significant low here on this chart. We're going to have I would imagine tomorrow, even if we try to go lower here, still keep your eyes open for that nested reversal going back up into that range because that's a very big level of support there at that 88.9 area. Now, I'm not opposed to being a seller, but you have to show me some proof on this. You've got to show me a 1, 2, 3, and really got to break down below that low. None of this head fake stuff. It's going to be a very strong breakthrough. Mark up that low, mark up that high, and then we can focus on selling up above the high, right, of that channel. Just be careful though, right? Just be careful. This is not going to be enough for a 1, 2, 3 breakout like that. I still have that level of support down there. It's not going to work. Right, what I want to do now is I want to go 1, 2, 3, really show me confirmation through that low. Then mark up that low, mark up that low, mark up that high, right? And then from there, you got it. We're selling off of that high. Now, there aren't that many targets down there because this is about as low as we've been here in the last few months. So we'll have to do some digging tomorrow morning in the trade room and find those next big targets down there. So now we get the plan though, right? Buy low, sell high. A lot of this has to do with, can we stay outside of that trading range? Buying low requires the nested. Selling high, use the buyer failure patterns. And again, as I mentioned before, if you're new here, make sure you check out that free trading course linked up in the description of the video. Over on the euro here, you can, again, like I said in the introduction, you can definitely tell the euro is waiting on some news later this afternoon. The euro, as you can see, is all chopped up right in this sideways range. It is a range-bound market. Range-bound markets are balanced markets. Those balanced markets tell us to buy low and sell high, right? Relatively easy idea there. I want to find levels of resistance overhead to be a seller. I want to find levels of support below to be a buyer. You'll notice how I'm drawing out, right, like that inverted triangle, that expanding triangle off those trend lines. I'd love to sell off the high. I'd love to buy off that low using those trend lines, right? Those will definitely be on our radar here, right, for tomorrow. So most important thing right now is there really isn't much of a bias to it, as you can see, right? There's a little bit of bullishness, a little bit of bearishness, right? It's kind of like a Neapolitan here right now, right? A little bit of bullishness, a little bit of bearishness. I think if the market does go lower, you'll have buyers coming in to buy off the low. If we go higher, sellers will come in to sell off that high. So the goal really at this point is to get outside of the range and then buy low or sell high going back up into that range. And really, in my opinion, the biggest clue on this chart is how narrow this range is. Now, narrow ranges tell us one very important thing, and that is get a big breakout. Narrow ranges. What's the problem with a narrow range? A narrow range, there's no open space. right? It's too small. It's too narrow. There's no space to make any money inside that range. And so whenever I see a real narrow range, I know that I'm going to have to focus on selling as high as I can and buying as low as I can, because that's the only way I'm going to be able to make it worth my while. It's the only way I can get a good risk to reward ratio to really filter out those losses. You know what I mean? If you try to trade too close to that range, you'll see a lot of false signals, a lot of false patterns. A lot of patterns will fail on you if you just simply try to sell right above that range. There's not a lot of profit baked into that trade, and therefore there's not going to be a lot of people that want to take that trade. And because there's no people taking it, it's not going to be a very reliable trade overall, is it? No, it won't. So now we kind of know, right? Now we know what the plan is there on that euro. Get outside the range and fade it back in. Now it's a pretty simple idea, right? Buy low, sell high. I've got my buy zone down here around that 10,300, 10,250. My sell zone up here, 1065, right to 10,600. Yes, I can do less, but I'd like to do, right, a nice deep pullback here, right? I'd like to see us go up, right, into that sell zone. Again, I've got this trend line coming in overhead, trend line down below. That makes for some easy targets there for us. We go up right into that trend line of resistance. Moving average comes over. You know the drill. Buyers will try to buy off that pullback. At that point, look for that failure into pullback combination for that run going back down into that trading range. If we get stuck in the middle, right, stay away from that middle. Run through it. Get that moving average coming down. Sellers will try to sell off of it. I'll let them try to sell, buy into their stop losses, and back up into the range. So it's a very simple strategy here. The hardest part is going to be staying patient, in my opinion. Stay out of the middle on this, right? Go up, again, into these key levels of resistance. Let the buyers now foolishly try to buy that pullback, and we're selling into their stops. We're selling on that pullback for that collapse back down into that trading range. Sit on hands in the middle. Wait for the move lower. Get that moving average coming over, right? Get that moving average coming over. Get those sellers try to sell off the moving average. Again, the deeper the better right now. We don't want to trade inside that range. We want to get that big breakout outside that range. So let those bears, let them try to sell that pullback. Let somebody else try to trade the breakout. Not on my account, that is. I'm waiting for that failure into pullback, right? And then back up we go in from there, right? Failure pattern, pullback pattern. And again, with all these range-bound markets this week, it's really very much a game of buying low, selling high, avoiding the middle. On the E-minis tonight, we definitely have some concerns about momentum, which will kind of change things around, right? Use the nested variation of that failure. And again, guys, don't forget breakouts, right? Breakouts, 1, 2, 3. Breakout, I have no problem trading a breakout, but you got to show me proof though. Strong move up, pull back to the moving average, mark up those highs, mark up that low, right? And buy that pullback. Again, got to get the 1, 2, 3 first, right? You don't want to try buying that first pullback. So you know what's going to happen? That first pullback will fail. Like this one back here. Right? We'll run up, nice and strong move, pull back to the moving average, buyers to the buy it, they fail. Right? So we can't just simply buy that first pullback, no matter how strong that first pullback is. Okay? Or we run lower, 1, strong move down, 2, pull back to the moving average, 3, strong move off. You got it. Mark up those lows, mark up that low. And again, with that much momentum, you're going to probably be able to get at least a couple targets off that pullback, off top of that channel. Okay, remember, at that point, momentum will be very, very strong. Any pullback at that point will likely be sold. Quick first target, stop moves the point of entry, trail that stop, right? And on we go. All right, guys. Now, don't forget, I cover all the patterns, my 3-step strategy inside of that free course, linked up in the upper right-hand corner. If you're on the blog right now, it's that big red button right below the video tonight on the blog at Sideways Markets. And again, as always, as I mentioned before, here tomorrow morning, we'll be back in our trade room bright and early, 8 o'clock Eastern time. We'll prep the charts. We'll go over all of our patterns and all of our rules. Make sure you get there on time tomorrow, especially if you're an oil trader, because we got that news at 10:30. We got big news tomorrow for euro and gold at 8:30, so be there early with me tomorrow morning. 8 o'clock Eastern time like clockwork. We'll see you guys tomorrow in the trade room. To get registered, if you aren't a member yet, to get registered as a member of our trade room, join the advanced course. The advanced course is right below me here on the website here at schooloftrade.com. If you're on YouTube, I'll put all the links in the description of the YouTube video. If you're on the blog, it's a big blue button right below the video tonight on the trading blog. So get registered, join as an advanced member. Don't forget, you can always call me if you have any questions. Use that toll-free phone number on the left-hand side or that live support tool on the right-hand side. Don't be afraid to call the office. I can walk you through the entire registration process over the phone. That's very easy. And also, too, if you're not ready yet to be a member, that's fine by me. Definitely take that free trial. The free trial includes your free trading course, the free pass to our trade room. You'll learn all about the trading strategy, hundreds of examples of how we apply this strategy to our favorite markets. So definitely take me up on that offer. Grab that free trial, grab the free course, and don't forget, when you register for the free course, I'm going to email you over all the details. So make sure you give me a real email address and check your spam filter if you don't see the welcome email for that free trial or the free trading course. All right, guys, we've covered a lot here in this video tonight. If you have any questions, call me, email, use live support. No matter what, though, I'll see you guys tomorrow morning, 8 o'clock Eastern time in the trade room. If not, come back and see me again tomorrow night on the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.